On behalf of Guru KPO, I, Professor B.K.Jain from MBA Department of Biyani Group of Colleges, welcomes you in this special lecture. My topic of lecture is Reserve Bank of India as regulator. As I said, the whole chapter is divided, whole topic is divided in two parts. I completed part 1 and now I am discussing part 2. There are two aspects of regulation in part 2. One is important regulatory activities of Reserve Bank of India. One important regulatory activities is licensing. I would like to make it very clear that there are three words which are bank, banker and banking. These three words are not permitted to be used by anybody without the permission of Reserve Bank of India. No bank can function in India without a license from Reserve Bank of India. And while giving license, Reserve Bank of India takes so many precautions. Now recently, for licensing, Reserve Bank of India has opened its policy for more private sector banks. Now these private sector banks have been asked to submit their letter of intent. And in today's paper only there was a news that many business corporate houses have submitted their letter of intents, and Reserve Bank of India is planning to issue license to 8-10 private sector banks by the month of July 2013. The another aspect is prescribing minimum capital requirements. Reserve Bank of India is authorized to prescribe what would be the minimum capital for incorporating a new bank. This minimum capital depends from the category of cities. Another aspect is monetary governance and monetary policy. Reserve Bank of India's main function is to conduct review of the entire economy, and based on that review, Reserve Bank of India announces its monetary policy for the future. Such reviews are conducted by Reserve Bank of India quarterly, that is 4 reviews, and in each quarter there is a mid-quarterly review. So throughout the year, there are 8 such reviews are being conducted by Reserve Bank of India. Another aspect is lending to priority sector. Reserve Bank of India decides how much amount of total loans and advances should go to priority sector as well as weaker sections of the community. And the last is income recognition and asset classification norms. In brief, they are known as NPA norms. In this category, Reserve Bank decides how the assets would be classified, and based on their classification, what will be the provision which would be made by the banks in India. The second one is the regulatory tools. There are 3 tools through which Reserve Bank of India regulates the entire banking system. One is on-site inspection. On-site inspection means Reserve Bank of India's officers are going to the headquarters of the bank and then conducts inspection. There are two main objects of this inspection. One is the commercial banks would be in a position to pay present as well as future depositors, and the activities of the bank are run in a way that they are not detrimental to the interest of depositors. This is known as on-site inspection. Another is off-site inspection. Off-site inspection means by not personally inspecting the accounts but calling periodic returns from the banks, and these returns are called through different intervals. There are daily returns, weekly returns, fortnightly returns, monthly returns, quarterly returns, 6-monthly returns, and annual returns. Through evaluation of these returns, Reserve Bank of India monitors the working of banks. And the last one is Reserve Bank of India is also conducting periodic meetings with the key officers of the bank and then discuss problems and offer solutions so that the entire banking system works properly. Thank you. For further details, please log on to www.gurukpo.com.